So it looks like it's a very favorable environment for Antofagasta right now. What are you doing with it? What are you expanding? Are you speeding up projects? How are you taking advantage of this?
Yeah, well, thank you for inviting me. It's great to be here with you again. Look, I think it's a favorable environment from a price point of view, but I think we are very focused on working as well through the sanitary conditions. And although those have improved in Chile, since they peaked in May or early June, I think we still have the risk out there which needs to we need to watch for. So a lot of focus still on the sanitary conditions of our workforce and our communities. But I think from the point of view of demand, we've seen demand recover, especially in China. There was also some impact on production earlier in the year, and therefore, we certainly are seeing a favorable market in terms of price. So we're keeping our production in line with our plans. And we also have a couple of expansion projects which we've been working on for now a year and which will continue. Once the sanitary conditions came about, we had to stop those projects, and we're quite eager actually to get them back. We've started them back in August, and therefore our expansions at Pelambres and Centinela, which are a couple of our key mines, is very important, especially as we look forward and the outlook for the market looks favorable.
You mentioned the Centinela mine, and it's been a source of labor conflicts as well, right? Is there a risk of worker strikes hitting the output guidance that you have in place?
We've had already several negotiations at Centinela and other mines which we've closed this year successfully. There's a couple that are ongoing, just precisely at this moment. And we will continue to work with our workforce, aiming for a sustainable long-term agreement. So we are in the middle of those negotiations, as I say, with a couple of those unions. But we're working with the aim of looking to come to agreement. And I hope that the negotiating teams will be able to achieve that.
How acquisitive are you feeling at the moment, given the environment? Do you see opportunities for deals being made?
I think the environment is favorable, and I think we would certainly like to see opportunities out there. Copper is a commodity where you will find that most of the good assets are dearly held, and therefore there's not a lot that's available in the market normally. But we continue to scout and look for different opportunities as they arise. So that's something that we will permanently look for. But as I say, in copper, assets don't get traded very frequently. So from that point of view, a lot of our focus is on developing our organic growth. And from that point of view, the development of our projects, is key. We also have an exploration program and are looking for some early targets, both in Chile and in some other jurisdictions in the Americas.
Of course, China takes a lion's share when it comes to copper demand. How are you gauging demand, the health of the market there, particularly as we continue to see accelerated economic recovery and infrastructure investment going into next year?
We're looking at it favorably in the sense that we've seen China come back from a very significant drop in the first quarter of this year, and that recovery has been sustained quite strongly. So the signs are there, both in terms of basic infrastructure and also in terms of exports, which are on the back of what we've seen in terms of copper demand in China. So to the extent that this is sustained, and those are the signs that we are witnessing in the Chinese market, we think that reads well to the effect of the copper price and the market generally. We're also seeing some recovery in the rest of the world outside China. I think it's a bit more mixed. So China is driving a lot of the recovery at this stage. But we're seeing that sustained both on the infrastructure side and on the export side, which is good and favorable for the copper market.
Yeah, will that demand from China be able to sustain prices? We just saw the chart and LME copper surpassing that $7,500 level. So where do you see prices towards year end?
Yeah, I think prices have certainly moved favorably. I think it's a combination of things. Demand in China is part of the story, no question. I think the other one is what's been happening with supply. I think in the course of this year, we did see some impact in supply when some producing countries stopped production, like Peru, Mexico, and Panama. Chile continued operating, but those countries did not for a while. And also we've seen a reduction in the scrap coming to market, the recycled copper, as COVID has impacted the ability for scrap production. So all those factors on the supply side are also helping for us to see what we believe is a tight market. And as we move into next year, we think we're expecting to see a slight deficit in the market, and therefore prices trading at levels which are similar to what we're witnessing today.
So you're actually expecting prices to fade a little bit next year below perhaps the 7,500 level. And also to your point on scrap supply, given the higher prices, are you expecting more flush out of the scrap supplies given that recycling is getting more profitable?
I think certainly higher prices are an incentive for more recycling, so we would expect to see some of that come back to the market. But I think there are sanitary restrictions today which are sort of making a difference in terms of slowing that recovery which would normally occur with these prices. And there's also been some restrictions in China with respect to the import of certain types of scrap, and therefore that's also restricting some of the supply side there. So it will come back, and I think we're seeing some evidence to that, but at slower rates than we have witnessed in a typical recovery.
How much concern is there, I think going back to one of Sherry's initial points, how concerned are you about a stoppage of the labour force at this very high profit, high margin point of the production cycle? Would you be more willing to, I guess, concede in some of these union negotiations, given the sensitivity of the pricing cycle at the moment?
Look, I think, as I mentioned before, we have several negotiations throughout the year. And we look at those with the perspective of long term. We think that the spot price at any specific point in time is not a good indication for these agreements. These agreements last anytime between 2 and 3 years, and therefore we do take a long-term perspective. And that's the way we work with the unions to try to reach agreements which will benefit both parties, contemplating what's healthy for the business in the long term.